The market makers are hiding us something. Not on this channel. Let's find out why this monthly double top can be different and be a real take profit chance. Let's deeply analyze every single similar monthly candle close, and let's find out if we can get a much clearer view of this candle signature that we just had yesterday. Let's dive into all this, but please smash the like and ring the bell. But first, the intro. All right, I just want to check this out. I just want to check something to be sure the sound is open. It's working, it's working. All right. Oh my God, let's start with this. Okay. No, I'm gonna start with to show you similar candle close that we have, and we gonna compare all of them one by one. This candle close yesterday was a double top. This candle here was a dragonfly doji that created a new high. But the candle closed below the opening price. What I did is that I tried to found in time different candle similar with this one and what happened after. And I found this one that was a double top in September 2017. But this was more a shooting star with less resistance, but I will show you anyway. And I found this one, which was more like a spinning top doji, but pretty similar anyway. You know, opening price and closing price were pretty similar. This one happened in January 17. Okay, just a second. It's not gonna be long. I want to follow all my notes. First, I want to deep dive into this S&P 500 and try to find out in times, you know, with this candle, the market situation, and we're gonna go all over many indicators, and I will present you all the differences. It's why you have to stay with me, because you will see all the difference, all the comparison on that I made on, and I present you on one image, which will give you the opportunity to see all those differences. Okay, if we get this one here, the 1st of January, okay, let's do that. January, where are you? Right there. Okay, situation here. This one is the 1st of September 2017. 1st of September. Whoops, sorry. Oh, I'm on the 3M, it's why. Sorry for that. Okay, 3rd of January and September 2017. That happened after. And we have the current lows. All right. If we take a look at the situation of the S&P 500, I'm presenting this to you because it is really important in the sense that the Bitcoin is usually following the stock market, and the S&P 500 is very important, NASDAQ too. But what happened, this crash, sorry, not this crash, this crash here that happened in the last year, in January, February, March, with what happened with the COVID-19, affect Bitcoin price. At that time, Bitcoin deeply retrace on exactly $3,850. Retrace right here. It's why the stock market is affecting the price of the Bitcoin, and when the price of Bitcoin is affected, almost every altcoins are too. Okay, here we are in a situation right now where the stock market is completely in the roof of this logarithmic channel that is starting March 2009. Almost 11 years channel, almost 10 years channel, more than 10 years. And now we kind of see some stagnation on the market recently, and we are right on top of this channel, which is pretty dangerous. Those two candles that happen, similar candle close in a double top with a doji, and this was a more like a hammer right here. They happen in a different market situation. We were not on the roof. We were in between the midline of the logarithmic channel, and we were not on top like we are right now, which is sending me a signal that risk management is much more important in that situation right now than it was here or here. Okay. Also, let's start with this first candle that happened, that is pretty similar to what happened yesterday. This was a double top, body at the same place. You see, we made a new high. Okay, but we didn't make a new low, and it's the same for this one too. Okay, we made a little new high. We didn't make a new low. And this one that just happened yesterday, we made a new high, but we didn't make a new low. But body candle close at the same place. Okay. First that I really like to watch was where we were in a cycle with Elliott waves, where we were. Did we add in that time a bearish divergence? Let's find out. Let's go on the weekly to have a clearer view. Okay. No bearish divergence here on the daily. Maybe 2 week. Let's find out. Okay. Here, from here, there was no bearish divergence. Okay. We had a bearish divergence here later. Okay, and we retrace much more. But here, no bearish divergence, which means this was probably the end of a minor wave 3. Okay. Also, this one right here, did we had any bearish divergence? Because you sorry, I want to show you this on the monthly because it's on the monthly chart for sure. Sorry for that. All right. Okay. I'm going to take this out too to have a clearer view. Okay, let's find if we add bearish divergence, because you know bearish divergence on the RSI are usually wave 5. And after a wave 5, usually we have a bigger retracement, a stronger retracement. It's why we need to figure out, okay, the situation of those candle close that were similar with the one we just had here. And no bearish divergence here at all. No bearish divergence here at all. Even if we go on the monthly, okay. Here, no bearish divergence. Maybe this one, this one I can bearish divergence here that we can see on the weekly. Okay. This one had a bearish divergence. This one, no. nothing at all from this high to this high. Bearish divergence, you know, it's when the price is going higher and the RSI is going lower. This is why we are calling that bearish divergence. Okay. Here, let's take a look. We had the first bearish divergence, price go up. Recently, RSI go down. Same with this one. Second bearish divergence, right here. And a new low again. Third bearish divergence, right here. That we can see much more clearer. Like, sorry for the graph, but it can be a resume by a huge bearish divergence that is coming from when January. Okay, it's almost 4 months bearish divergence, and we'll still are maybe doing another right here, but we don't have a new high. I'm not gonna include that for sure. Also, one thing to notice that is very important is to figure out when this happened on the monthly chart. This candle close just happened on the monthly chart. The RSI was at what? Overbought territory near 90. RSI very high, overbought territory. This one was 85.85, almost 86, overbought territory. And this one was 75. Overbought territory, but not that much, I mean. Okay. And what was the situation of the RSI? Where the RSI was pointing? This one was pointing to go up after. This one was pointing to go up after. And this one has already turned down a little bit. You see this? Look. I think you can see well here. Okay, this three similar candle close with a complete different situation on the market and on the RSI for now. We found one bearish divergence which is here, no bearish divergence there, and here we found three bearish divergence in a row. Wave 5 that closed in a row. Okay, all right. Let's grab the MACD. Okay, what I want to see is there something on the high time frame like a bearish cross of the MACD that happens on the weekly chart or 2 weekly? Let's find out. Let's start with the 2 week. No bearish divergence, no bearish cross. No bearish cross here too. Let's see. No bearish cross on the 2 week. But this is important. Those are high time frame. More higher the time frame, how I can say that higher the time frame, stronger is the confirmation. On the weekly chart, we had this bearish cross on the MACD. Okay, and this candle close, no bearish cross on the MACD, no bearish cross on the MACD on the weekly chart. Those are high time frame. Different situation now with this close here on the weekly. We just signal a bearish cross. It starting to be red here. Those two single monthly candle close that were similar with the one we just had did not had any bearish cross on the MACD. Okay, all right. Also, one important thing that I want to show you is the pi cycle. The pi cycle is a simple indicator who use the moving average 350 with the moving average combined with the moving average 111. And historically, when this those two MAs moving average cross, the pi cycle top is called. And on the weekly, you see the pi cycle had called the last bull market. Bull trend that happened in that ends in December 2017. And the pi cycle just called a new top because we are having a cross of those two moving average. We had a cross of those two moving average. Okay, we didn't had a cross the pi cycle here. This was not a top. It was not the end of the bull any bull trend. It was the first wave, second wave retracement, and now are we on the third wave? Probable, or are we on the fifth wave? This is gonna we might gonna make another episode and deep dive on this. Okay. Also, let's count the candles, the bullish candles that happen that were created before this double top. We have 1, 2, 3, 4, 5, 6. This is the 7th candle, and this was rejected, and this is a bearish signal for sure that show that we are retracing and rejecting what? We are rejecting 2 times in a row 58,800 almost. 2 times in a row this price was rejected. Okay. Here, what happened? No pi cycle top call on this one. No pi cycle top call on this one. We had 1, 2, 3, 4, 5 candle before, 5 bullish candle before this one, and 1, 2, 3, 4 bullish candle before this one here. And how much we raise before we decide to have to close right here with this double top. We rise before 107%. On this one here, we rose 361%. And let's find out here. We rose 523%. Okay. This is a significant here. I think, there's a big difference. We are starting to see those differences right now. I'm presenting them to you because I think it's important. It doesn't mean that we're not gonna do like what happened in the past, but you are starting to see those differences right now. Okay. One other thing that I really like to show is the in English I don't know, it's the Yule moving average. Is it here? Yule moving average. Okay. All right. The Yule moving average is a directional trend indicator that I like a lot. It captures the current state of the market and uses recent price action to determine if conditions are bullish or bearish relative to historical data. This indicator is designed to reduce the lag often associated with those MAs. This is an important dynamic to understand because it represents the universal trade-off that all indicator must contend with, the balance between providing an accurate signal that waits for confirmation and the first mover advantage that can only comes from a rapid fire low latency trigger. And here what we can see, if we are looking at the difference, the Yule moving average now is resistance is over at 60,476 and will act as a resistance. And you don't like too much to have the Yule as a resistance. And here on the monthly chart, the Yule was support, dynamic support right there. And here, very close, let's figure out candle close, I think, was just a little under the Yule at that time, but it's difficult to see. But anyway, what is important to figure out now is that the Yule is clearly a resistance right now and over the price. Okay. Let's come back on the MACD a second. Just want to show you something. I think it's really important to show you this. Look at how high this indicator was right now, and his around 10,775. When those the last bull market that ends here, the indicator was around 22, 23, 2,400, and now we're like at 10,775. It's kind of very high. We never been that high. Also, just want to show you that as something that I saw. And let's go over the EMA ribbon. Okay. The EMA ribbon situation here was kind of okay because the EMA ribbon was still contracted, okay, not release. Here was starting to be a little too much release. When you see those, you're starting to see a good distance between all those exponential moving average. It's always a little more dangerous because how I can explain that? It's like jumping on a trampoline and be a little bit too far of the trampoline. And it's usually a very nice place for the market makers to, pull back and get back the liquidity, potential liquidity that will give an opportunity to continue the trend. Or if the support is not there and the buyers are not there, they will just go lower and try to find liquidity lower. Right now, as you see, we cross under the monthly. And now, look at this. Look how far we are from this exponential moving average, the EMA ribbon. And when this happened, the price is starting to lose momentum and lose strength because also it coincides too with the moving average 21 on the monthly and the moving average 21 on the weekly because usually they are retest. Especially the moving average 21 on the weekly is always retested, and now it has been such a long time that we didn't retest the moving average 21 on the weekly, and this is showing the lack of strength right now. It's way too extended, and when you want to have a bigger push on the upside, you need to take your swing somewhere on when the EMA ribbon is contracted, and reverse a little bit to give the optimal swing. It's always like this, and right now, like here, you see how the EMA ribbon was contracted. They used that as a huge swing, and here at the end of the bull market in 2017, we can see that we were very similar in a very similar situation that we are now with this extended EMA ribbons. That all the EMAs are starting to have a little bit too much distance one each other. And you see when these things happen, it's more dangerous. It's more risky. It's always been like this. And look at right now. It's just ugly for me. I mean, whoa. It's I know maybe some people that don't know too much about the EMA ribbon will not understand, but in time I can understand the how this EMA ribbon can play and be resistance and support. And for sure, now we can not say that the EMA ribbon is resistance, not at all. The EMA ribbon is support, but the support is around 36K to 21K. And usually they love to grab all the liquidity and grab even the liquidity on the bottom of this EMA ribbon. Anyway, that was just my point on this. I think the good word is discard, to say that the EMA, all the EMAs are have distance one between each other. Okay. Just want to check my note to be sure I don't miss something right here. Okay. If we just analyze this candle close here on the monthly and try to figure out what happened, and okay, here, all this week was a rejection. All this week was a rejection 2 times in a row. Now, tomorrow, we're going to start to have this new candle forming, and on the upside or on the downside. But now you need to know that this is strong resistance right there. In between 58,000, almost 800, and 61,700, 2 times rejected. This means something, and in risk management is that something that we must consider. The price pumping here will not be a time, to get in, or even a little higher here near the resistance. It's like buying. You can get trapped like crazy. You don't do that. You wait for a confirmation that the resistance is now support, and that the candle close over the resistance to confirm that old resistance as a new support. Also, all right. Okay. I'm gonna show you the chart, the comparison that I made. Okay, this is the first similar candle close we have in 1st of January 2017. I mean, it's December 31st, but anyway, I'm putting the 1st of January, beginning of the month, 1st of September, and the recent monthly candle close on double top that we had with this dragonfly. Look at that. Bearish divergence, yeah. On this candle close, on this double top, we had a bearish divergence in 2017 in September. But we have 3 bearish divergence on the recent candle close that happened the 1st of May, yesterday. The weekly MACD bearish cross, we had one. Those double top didn't have any MACD weekly MACD bearish cross. The Pi cycle didn't call any top here and here. Pi cycle just called a top for the recent close. The monthly Stoch RSI bearish cross. This is the one that I want to show you right there that I forgot. Stoch RSI. Here we go. Okay, look. I'm going to take this out this way you see better, but this is a bearish cross here. This is a bullish cross of the Stoch RSI. We just had a monthly bearish cross. This is significative, doesn't mean it will not continue, and this blue line will not go but we're still on top. Look at this, we're almost at 100. We don't have any more place to go higher anyway. I mean, this is something to consider, I think. I don't know what you think, but look, last time we had this bearish cross here, after we've been to 14,000, and this was the last call for the last bull market in 2017. Bearish cross there, and we just had this bearish cross. Is it a signal? If you're telling me no, there's no risk here, hey, Mr. Mercy, there's no risk right now, I think with what you just show us, there's nothing, you know. What? Yeah. All right. I understand you. Okay. Risk management. Okay. Also, don't forget stock market situation on top like this. Risk management. Here, the RSI. Oops, sorry, I miswrote that. Risk overbought. This is the monthly RSI overbought situation. The 1st of January on this double top, we had 73. 1st of September, double top, we had 86, and recent double top, we had 90. All right, this is a much overbought here, and here you see. The RSI pointing down on the monthly, 1st of September, 1st of May, and it did not happen the January 1st, 2017. The Ema Ribbon posture losing strength by this distance that are creating in between exponential moving average. This is okay for the 1st of September. This was not looking so good. It was the beginning of the end, and this is the postures doesn't look good at all right now for the Ema Ribbon. Also, we didn't test the moving average 21 since a while, and we're kind of far from the moving average 21 on the monthly, really far. About the Yule indicator resistance, we don't have any Yule resistance here on the monthly. On the 1st of September, no. And we are having the Yule indicator as a resistance right now on the last double top. The close below the 2 weekly upper Bollinger Band. I didn't show you that, but I will show it to you. And I didn't show you the monthly Kaiji June bearish cross 2 that happens on every one. Anyway, those are faster indicators that try to catch what's coming. And let's just check the Bollinger Band here. I want to show you on the 2 week. We are now having the upper band as a resistance. Okay, this is the middle line in red here. I'm going to put that in yellow. But this middle line is very important because it's the moving average 21. You can put moving average 20, but I like to put the moving average 21. And this is a magnetic. It's like I don't know the name in English. Magnetic. It it's working like gravity a little bit. It needs to to be retest someday. You know, on the weekly, we are very close. Do you think that at this point we will not go test this moving average 21? Uh, Sheesh. I don't know, but we're kind of. I think I can feel that we are going there. We add this low here that was not a new low, but we create a new low right here, and we create a lower high right here. Sorry. But this was a weekly close. We create a lower high for sure. But now we are creating a higher high right here. But this moving average 21 on the weekly used to be test. You know, it's important to retest this one. It's it's harmonic. I mean, on the Bollinger Band, you can push the Bollinger Band sometimes, but not eternally. I mean, on the weekly, it must go back, test the bottom of the at least the middle band, because it's like always been like a ping pong game in between the upper band and the how you say that in English, the lower band of the Bollinger Band. It's always like a ping pong game, and now we're pushing this, but this will be don't be surprised if we are going to retest 20k, which is our last stop right here. Don't be surprised. Everyone is like in euphoria. I can see that on Twitter right now. Everyone is, we're going to the moon. $100,000 in 1 month. Oh, Bitcoin is never gonna go to 20k. Impossible. It's gonna take 4 years before it's gonna go test 20k. It's been a while that we're pushing this, risk management, guys. It's starting to turn right here. Look at this head. Look at this shoulder. Oh my God. I don't know. Maybe I'm the only one on my planet. Probably, look at that. Look at that here. You think that, it's not a head and shoulders that it's forming right now? I don't know. It's damn. Anyway. Let me know what you think in the comment section below. Do you think this recently monthly close in double top is significantly different than the others? Are you bearish or are you kind of bullish right now? You don't care. Are you taking the risk? Or you may think that this can be a great opportunity to take some profits and at least wait. If we bust that resistance and we go higher, just wait. What do you have to lose? This kind of monthly close are huge opportunity to take profit. Huge opportunity to take profit. This is market makers doing that. If we are going lower, they are pretty cool right now. They're not laughing so much. They're saying, okay, a lot of people, we have cryptos coming to the media. A lot more people know about Bitcoin and cryptocurrency right now. We're going to play that a little cool, and we're just going to give them a little warning there, and they can take profit. I'm telling you, it's not happening all the time. I mean, if they were really, really, sorry for the words, assholes, they don't even care. They will create a double top here and they will push the price right like this, or, a little much lower. It's on the 2 week. Let's see. Yeah. If they were savage, they will just crash the price down and, you know, grab everyone, you know, take all the money, all the liquidity. But they're not doing this right now. Okay, uh, I mean, it's a great opportunity in risk management to take profit because, as you know, I like to play candle close on a monthly to swing. And this here, if you listen other video, you will probably enter here and, you know, just quit, because I was waiting for a double top to quit. Confirmation, you take your profit, you know, you're happy. You buy your kid a new bike. Okay, it's I mean, this is look at what happened here. This double top right there. This was significant. Yes, we didn't make a new high, but we didn't make a new low. But this was a double top, and the monthly candle confirmation after, say, shooting star, we're going lower. Okay, this one was not so nice like we just had right here. This one reject the price, and they bring the price down by almost 53%, more than 53%. They wreck many people here, and and I know probably some people. Oh no, I just lost. I bought 3 Bitcoin at 20,000 K, and now it's about $9,000. But I will hold, because I think it's gonna go much higher. And no, it's not going higher. It's not going higher. It's going lower. Capitulation here. Double bottom right there. That says confirm, go, get in. If you want to get in, you wait for the confirmation, and you wait for that close, and you get out, and you take 162% profit. Okay, I think everything is pretty clear. And I know I had some friends. I was telling them, don't do that. You know, don't be FOMO. You know, you buy in the accumulation zone like here, or but you don't buy on top like a FOMO, like when everyone is starting to talk about it, and now they decide to sell here. I remember he told me, well, you know, it's we lost all our money, and so we're just gonna sell before it's going to zero. Yeah, that's the pain. That's the pain. That's the pain, guys. Anyway, this monthly candle close were pretty similar, but were completely different, in a completely different situation in the market. The indicator were completely different in the market too. I mean, it doesn't mean that we're not gonna go from here higher. Doesn't mean that. But what are the chance with all those signals that I just present you that we are gonna go lower? What are the chances? Are you saying, oh, it's 50-50, I don't think, you know, it's 50-50, all right, okay, it's 50-50, but please, it's 50-50. You have a bunch of resistance over your head right now. Just don't take the risk. Risk management. Take your profit. Get out. Get out now and wait. If we bust and we break through that resistance, and you think everyone is bullish, the media, Bitcoin, you know, I think Apple just bought 4 billion Bitcoins, and Elon Musk just bought another $100 million, and he bought some for his kids. He bought some Bitcoin for his kids. Yeah, at $60,000, he bought one Bitcoin for his kids because he think that Bitcoin is gonna go to 1 million next year. Yeah. Okay, it's possible. It's possible, but risk management here. Situation critical, different situation. Many indicators are flagging, are saying, watch out. Take some profit. Take some profit and make some renovation inside your house a little bit. And if you paint the wall, take some couple of bucks to repaint the walls in white inside your house. Do something with, I don't know, or wait, grab that liquidity, and if we go down and crash and Bitcoin crash, you will be able to buy. You will have access to lower price, and instead of having one Bitcoin, maybe you have 2, 3, 4 Bitcoin. I don't know. I'm just saying. And usually, don't forget, altcoins season happen here. The game is not over. It's not because we have an alert and a warning right now that it's going to be the end of the world and no more fun with cryptocurrency. No way. For sure, you're gonna have some great days. You're gonna have. It's like, just want to show you very quickly because it's been a while that I'm live, but when the stock market crash, okay, this is funny because I protect all my liquidity before, because I'm on the logarithmic chart, but I was seeing a rising wedge, and now I'm showing you the logarithmic channel, but I protect all my liquidity, and before I remember around September I was seeing bearish divergence here, and I didn't like that. I was kind of afraid, and I told to my girlfriend, I said, it's maybe time to protect all our liquidity. I don't feel so good right now, by leaving all our money on the market, and damn, I sold almost everything, and because of this, we miss all this swing right there. And I was asking question, but I was sure, because I was seeing this RSI making a new bearish divergence right here. I was sure that it was gonna go crash. It was gonna go crash someday, and I will be able to, get a much better price when it will retrace. And maybe I was lucky, and these things with the COVID-19 happened, and lucky. I mean, it was not a great news, but the market crashed and the Bitcoin crashed, and all my liquidity was protected, almost everything. Okay, I had some bonds a little bit, but almost all my liquidity was protected, and I bought. I don't remember. I wait, I think 2 or 3 days, and bought back some funds, and I made I made good money, by with that swing, and it's risk management. It's bearish divergence. They're normally a big huge signal of hand of fifth wave of wave 5, and 2 in a row now. We had 3 in a row for Bitcoin right now. This is clear for me that it's dangerous. Maybe people are thinking that I'm a clown. I don't care. I'm a clown. Maybe I'm just here to try to show you that there is some risk right now, and you do what you want. You do what you want. Look at we had all those huge candle. But it's always great to let a new investor buy and come in and it's probably what's going to happen now. It's not sure at 100%. Maybe I was not right, and we're going to go higher, but I'm not the kind of guy who's going to take those risks. I prefer protect my liquidity in those times, and I just gave you a comparison sorry, with the S&P 500, but this is a clear bearish divergence. 1, 2 right here, and this is the third one, and even on a lower time frame anyway, you see bearish divergence all the way from here. Yeah, we need to take this in consideration, and we have great support. I made a video to show you possible buying entries for Bitcoin, and we'll probably deep dive a little bit more on this and try to analyze retracement possible fib. If we are going lower, we want to know where Bitcoin can fall. But I'm telling you, on what I see now, and in the Wyckoff pattern method, I see Bitcoin's going back to 20K. For me, Bitcoin is going to go back, test this. If it doesn't work, he's going to go test this at 12K. Believe me. First, he's going to have to test this support around 38, 39. I think this will be the first big support that we should get a nice rebound, a nice swing. You know, it's why this can be a great buying zone. But if they want to, they gave a signal here. If they want, they can take all your liquidity and say bye-bye, woohoo, and heat everything and, stay for the rest of their life in the Caribbean and buy a 2-3 house on the water. But hope you like, guys. Thank you for being here with me. I wish you the best of the best. Have a great Saturday. And leave me a comment. Thank you very much. I appreciate your time. And I hope that this is giving you a clearer view of how this monthly candle close double top can be different than those two that happened before that were pretty similar. And wish you the best. Bye-bye. Thank you. Cheers.